Welcome to the daily insights that matter. As startup valuations continue to surge, an increasing number of companies are seeking ways to streamline their operations and maintain sustainable growth. This has led to companies to start a wave of layoffs amid these factors. Let's discuss this. The startup ecosystem has gone through a rough patch in the past few years. Globally, around 687 companies have laid off around 2 lakh workers in 2023. This is already 18% more than what was seen in the year 2022. India, however, is better off with a slower pace of layoffs. When we talk about the Indian startups, about 8,134 employees have reportedly lost their jobs so far in the 5th month of the current calendar year. This is already 50% of the previous year's layoffs and is likely to break and go upwards. Looking at the breakup of Indian tech companies, education associated startups were the worst affected, recording the maximum number of layoffs. This is almost 2 times the number of layoffs in the sectors that followed. While we look at the city-wise breakup, the IT hub Bengaluru recorded the highest layoffs, followed by Gurugram and Mumbai. The layoffs can be broadly indicative of the trend in tech companies amid an adverse funding winter and a global economic slowdown. Mass layoffs in early 2023 were due to high aggressive hiring, employee costs, tech salary increasing in 2021 that led to the dominance of new age startups in the Indian startup ecosystem. Some of the factors that contributed to the layoffs are cost cutting, fear of economic recession, pressure from investors, and weak consumer demand due to inflation. Globally, the trend has been the same, with almost all tech companies going for a massive layoff like Amazon, Alphabet, Meta, Microsoft, etc. India's journey towards becoming the 5th largest global economy has been commendable. But when it comes to insurance penetration, there is still a long road ahead. Despite more than 2 decades of liberalization in the insurance industry, India lags behind the global average in terms of insurance penetration. Although there was some progress with insurance penetration increasing from 2.7% in 2000 to 4.2% in 2020, there was a slight dip to 3.2% in the year 2021, according to Economic Survey 2022-2023. Several factors contribute to this low insurance penetration, including limited education levels, regulatory challenges, and a lack of innovation. However, for insurance companies, this underpenetration represents a significant untapped opportunity. In one of our Third Empire videos, we had discussed some new reforms which is expected to help strengthen the ease of doing business and in the insurance sector and aid in making the sector more investment friendly. In line with this, the regulator plans to issue around a dozen new licenses this year, building on the momentum from the previous year when 3 companies obtained licenses after a decade-long gap. Notably, near 20 applications are awaiting approval with the Insurance Regulatory and Development Authority of India. To attain the goal of insurance for all by 2047, existing insurers need to scale up and new players must enter the sector. If a dozen of these applicants receive the final approval to start insurance operations, it would bring in new players with fresh ideas, innovative products, and competitive offerings. This increased competition can foster growth, encourage customer-centric approaches, and drive the overall improvement in the insurance sector. So what does all of this news mean for you? After a gloomy start to 2023 and the funding winter crunch, companies have resorted to layoffs. As there is much uncertainty around whether this would go on for another quarter or year, this presents a neutral outlook to the startup ecosystem. This is good news for the industry because it shows the regulator is more opening to allowing new companies to enter the market. It also indicates that there is a growing interest from companies to provide insurance services in India. This presents a positive outlook for the industry as a whole, while opportunities for both existing and new players to thrive in India's evolving insurance market. While I say this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com